Welcome everybody to the Chinchilla Pickin' Podcast. It is March the 3rd, 2024 at 2:39 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I'm joined by the one and only incomparable Brandon Beaver. Brandon, how are you?
I'm doing great. How about you?
I'm doing well because you can't do great or good, but you could be doing well. That's the proper English. I don't. The grammar police just came out today. I don't know why,
You could
but
do great. Why can't you be doing great? I don't understand that. Maybe
it's
I'm
not proper grammar. Proper grammar says I am doing well.
well as mediocre though, right? I'm doing
So
okay.
remember, from 2 years old until about 10 or 11, I was in Great Britain. So I learned the King's English, and the King's English is I am doing well.
Okay.
I'm gonna go out speaking to kings. All right. How have you been doing this week, man?
Doing okay. I mean, not much going on this side of things really, other than just watching the market, being dumbfounded at some things, and that's about it.
It is crazy to watch certain things in the market because you're like, why is this happening this way? And sometimes you could dig and find some reason for it, but then sometimes you can dig and you can't find any reason at all why the market's moving that way.
Yeah, well, it's no good reason sometimes.
Okay. But you found a reason though.
Right.
Okay. All right. Well, I mean, that's something. That's something. At least that gives hope to people out there. Like, can I find how this works, why this works, and maybe we can figure it out together. Make some money off of it because that's always the goal, right?
Yeah, sometimes it's the dumb money moving markets. They call it the smart money, but sometimes it's the dumb money.
And sometimes it's luck.
Yeah. Yeah.
So
There's
there
plenty
you
of
go. You have
people, plenty of people are more than happy to get that confused with skill.
yes,
Yeah.
and we've criticized that enough on the show for us to go into it again. But yes, that happens a lot. I mean, Sam Brinkman.
Yeah. Well, so this is one of the reasons why I'm so glad that we live in the Cincinnati greater tri-state area here in Southwest Ohio and not on Wall Street, because a lot of those people that believe they're more intelligent than what they really are live up there on Wall Street, and they do this on a day-to-day basis. And to be honest with you, a lot of those people, I was just watching this thing on the 1980s where they talked about an investor conference where a bunch of junk bond sellers used to go, and it was called the Predators Ball. And why anybody would be a constituent or a customer or client or whatever of somebody who goes to the Predators Ball is beyond me. But I detest a lot of those people. I think that was Michael
Gotcha.
Milken that used to do that. Yeah. How transparent can you be that you're a charlatan and that you're just taking advantage of people, and that eventually you're one day going to be found out. It's,
Right. Did you ever see that clip of Robert Downey Jr. back? This is like late 80s, 89, 88, where he went in for a role. So he went into Wall Street there and just kind of hung out for a day. And then they got his comments afterwards. And it was hilarious.
He's like, I hate these people.
Yeah, he said these are the most power hungry, money hungry, detestable individuals. And he
Yeah.
went on a rampage. And I was like,
Yeah.
oh, that's hilarious.
They make a lot of mistakes though. So that's why it's easier for us who are outside of that mix to be able to take advantage of it. It's one of the reasons why Warren Buffett never left Omaha.
Yeah, right. I did. I went to high school in Omaha, Nebraska, and I'm glad I left. So, anyways, how about we get to some stock and investment news? So, rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. You hear the live back and forth, the bicker and the banter right here on the show for you. Brandon, take us away.
All right. So Dell had earnings this week, largely mixed, but the stock went crazy because of artificial intelligence, of course. Revenue was $22.32 billion versus $22.16 billion estimated by the street, but this was not even in the range of their own guidance. Their guidance was 22.5 billion to 23.5 billion. So they missed their own guidance on this. Earnings per share did beat pretty heavily here, $2.20 versus $1.73. Um, Dell's revenue for the fiscal 2024 fourth quarter fell 11% from $25.04 billion. The company reported net income of of $1.16 billion, up 89%. Chief Financial Officer Yvonne McGill said that she's increasing the annual dividend by 20% to $1.78 per share. I don't see here how this stock moves the way that it did. The best day on record for Dell, other than just the fact that they're saying they're positioned well to benefit from the boom of artificial intelligence, which, by the way, is already here. It's been happening for the past year. How's your revenue down 11% year over year? I mean, I understand this stock going up 2 to 3%, maybe 4%. It was fairly maybe undervalued compared to other tech stocks. But it deserved that valuation. You know, if you're not increasing your revenue on an organic basis and you're increasing your I'm sorry, if you're not increasing your earnings on an organic basis and your profits going up because of cost cuts, how does that generate, I don't know, what was it up 20%?
It's a little. It went up. I'm looking at it right now. Went up a little over 20%
Yeah.
profit there. But it's actually. I'm going to jump in here because I'm looking at this, pulling it up again, just so our listeners know. Brandon told me he was going to talk about Dell, and I was like, "Look, I haven't looked into the Dell situation. I don't know what's really going on here. I saw a couple of headlines about it popping. That was it, right? And I haven't really checked Dell's fundamentals in a number of years. So for me, this is, I'm just shooting off the cuff here, but I'm looking briefly, just quickly at the chart. Over the past 1 year of time, from 1 year ago to today, Brandon, this stock went from $34 a share to 124. So it's had some growth before last week.
The
It's had a
stock
lot of growth. Yeah,
itself.
the stock has.
Yeah.
So
Um,
they are having some growth, and it is partly probably I assume because of the AI, but
okay,
it
so let's differentiate though, because the earnings are growing right now, which is great, but the revenue is not. Um, even in
that's a
most
lot of companies right now. A lot of companies are doing that because of they need to cut costs in order to keep their bottom line up.
So what does that leave us with, a stock market bubble? Because that's what I'm
Eh,
thinking.
we've this has happened before, and people have called that stuff before, but then the economy turned around and the
We'll see.
companies just kept rolling on, and revenue, and then the top line went higher. So I mean, yeah, you can call it that.
But
I
you
guess
would
I
think
mean,
growth for the stock price and growth for the company are two different things.
yes, yes, that can be the case. That can be the case. Yes.
So Dell's Infrastructure Solutions Group, which is one of the things that people point to, and they say, well, they're not just in the PC market, they're in the IT infrastructure. They reported $9.3 billion in revenue for the quarter, down 6% year over year, up 10% from the third quarter, but still down 6% year over year.
So is this overvalued because the stock has jumped from 34 to 120 year over year?
So I'm still saying, like, I think it is a little overvalued here. It's close to the fair value range.
What's the price to
I
book?
don't, huh?
What's the price to
I don't
book?
know the price to book off the top of my head. I think the price to sales was near like one, but I don't know price to book on it, to be honest with you. I didn't record that. The company solutions group, CSG, reported $11.7 billion for the quarter, down 12% year over year. I I don't see why a 20% increase here was warranted. I don't get it. So we can look up the price to book if you want, but the only reason here 20% increase artificial intelligence. I don't that's they're using artificial intelligence. They said it on the call. Um and I
I
think they hear that and they buy the stock because of it.
Yeah, I might just create a AI the cryptocurrency token and see so much money I can make from it.
Good. Sure.
Right. But anyways, PB ratio of March as of March of 2024, according to Dell's latest financial reports, price to book of -26.
So it's not usable, essentially. It's not a usable statistic then.
That's what it's saying, man.
Yeah.
I'm
So
just
okay.
reading
So
what it's
that's I
saying
mean
here.
that's not a good. Yeah. Okay. So
Yeah.
AI. I mean, just I watch things like this and I think to myself, why does the Federal Reserve even need to raise rates? If
You know what's
investments and money in the stock market is coming this easily right now, I don't see why you would cut rates at this point in time. There's no reason to.
Well, hold on. Before we get into Federal Reserve and them cutting rates and everything, I just want to point out Dell, the last time they had a positive price to book was October of 2021.
Yeah, I'm really surprised we're even talking about Dell right now. I looked up the most Googled stocks and it's in the top five.
Really?
Yeah, probably
Probably
because
because
of the
yeah.
20% increase,
Yeah, I
right?
mean,
So
that's gonna
Mark's
people. There's a whole group of retail investors that when they see a stock jump up real quick, they all want to pile in, and
right.
then, and I laugh at that every single time. I'm like, this gapped up. You've already missed the boat. Will it go higher? Maybe, but you haven't done your research because you're just jumping in off of news. Do your research. See the fundamentals are there. Obviously, the fundamentals are not there for Dell, so I don't know what's going on.
It is the only stocks are the only thing that people buy that they wait for them to increase in price to buy. And that's the opposite, unless you're looking to do a swing trade based on momentum. If you're trying to buy and invest in something for the long term, you don't want to buy something because it's increased in value. I'm going to
Yeah.
go into General Electric here in a minute. And I bought it initially at like $77 a share, somewhere around there. I had the cost average down because it dropped down into 50. But when it dropped down into the $50 price range, I overloaded and bought a ton of it, right? And
Yep.
now I've more than doubled my money on it. If I would have waited until the $50 price range, then I would have tripled. But I didn't know that $50 price range was coming. I just got surprised happily by it. But, nobody goes to the grocery store and says, I think I'm going to wait for a carton of eggs to rise in value before I buy it. But they go to the stock market and they're like, oh, this raised 20%. Maybe I should jump in now. That's not the
Yeah.
mindset that you should have as an investor.
Yeah. You should be selling the news and you should be buying when everybody is like really dogging the stock or not maybe dogging it, just not noticing in it. Nobody's giving attention to it.
Well, yeah, when Kramer's crying about Meta on TV saying he got it wrong, maybe that's when you should buy in.
He's got a number of them right too over the years, just to put that out there for his sake.
Okay.
Yes. But that's why coming in doing your research actually makes a difference.
Yeah.
Yeah, so just a brief little quick research I did out here off of Dell, man. I don't know if I would jump in there. That price to book is not good. Based on what you're saying, we haven't seen really a big increase in top line or bottom line numbers too much, really, right?
Right. It's
Year over
not,
year. So
and
year over
they're
year, what
expecting to return to revenue growth in 2025.
so I mean, so what you're looking at here is you're investing in Dell because of the hopes that they'll make money off of AI.
Yes. And the thing is that usually if you say that, company, if they've got good management, um, let's say they say they're going to return to growth in 2025, sometimes it signals a bottom in the stock, not a good reason to increase 20% off of off the backs of a year where you've already been outperforming the S&P 500. It doesn't,
Okay.
right. So it doesn't make any sense, I don't think, to buy at this point. And yeah, so great. Management saying return to growth for fiscal year 2025, but they missed their own estimates this quarter. So what kind of faith do you put into that?
I mean, I don't put it in any. I'm not buying it.
The earnings were a mixed bag. There was no good reason for the stock to increase. And now that I'm watching this AI boom into what I think is turning into an AI bubble, not saying it's going to crash and send the entire economy down with it, but I think we do need a correction here, right? And there's no reason I mean, we went into this year thinking, as a whole, not me necessarily, not you necessarily, but the economists, the experts were thinking March rate cuts were probable. May rate cuts were almost a slam dunk. And now I'm watching this and I'm thinking, why? There's no good reason for it.
All right, so you brought it up, so I'm going to talk about it.
Okay.
All right. Here we go. This is an article that came out on March the 1st, 3:14 p.m. It was on MT Newswires. The article reads Federal Reserve Watch for March 1st. So just gives basically all the Federal Reserve governors and presidents and yada 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 the boards comments, right? It's just a reserve watch. So it just gives comments on what they are every month. It comes out on the first of the month. So here's what some of the Federal Reserve members are saying. So Federal Reserve Governor Christopher Walker said that he would like to see the central bank's holdings of mortgage-backed securities fall to zero and its treasury holdings to shift towards shorter dated securities to better align with its policy rate.
Golf clap. Give that
Right,
guy,
Dallas.
well, standing ovation. Give that guy a standing ovation.
Right, Dallas Fed President Lori Logan said that it'll be appropriate at some point to slow the pace of balance sheet runoff. So kind of an opposite view here when holdings reach a certain level, but did not specify what level, what time it would be. So she still agrees with the keep running off, keep getting it down, but then at some point we need to slow down the running down here. The Federal Board released a semi-annual report to Congress, which recapped its actions over the last year to bring down inflation and said that the pace of price appreciation has slowed but remains above target. As usual, the report contained little new information, turning to focus on Fed Chairman Jerome Powell's testimony on March 6th and 7th. So that's coming up this week. Federal Reserve President Tom Barkin said that he's in no hurry to cut rates, repeating that the data will be the driver of the FOMC's decisions. And then you go on here, there's a number of Fed members that are, some are voters, some are non-voters, that say they'll lower interest rates later in 2024. A number of them even say May, around there, but they say lower in 2024. The one Williams on February 28th, Williams said that the journey back to FOMC's 2% inflation goal is likely to be bumpy, but expects price appreciation to return there later in 2024 and will remain data dependent. So again, they're repeating the same thing. They all seem to say the same thing, that they're going to go off of what the data says. However, there is a mix. They are split. Some people say we'll have some rate cuts later on this year, and some of them are saying that, we may not, we shouldn't. So, that's why they have votes.
Yeah.
Some of these are non-voters and some of these are voters, but that's why they vote on it. And majority comes out with the decision that you see Jerome Powell announce or release.
So for sure now, March, no. For sure.
Yeah. All of them seem agreed on that. Nothing, yeah. And nobody has said anything until at least the earliest statement given was May,
which is good.
Yeah.
May is even. I'm 90% of me is against May. Unless something drastic happens, in the next month or two, where we see some sort of deflationary recession kick in because of it. There's no reason. If you cut interest rates right now in this market environment, you're going to send the S&P 500 to unsustainable highs, in which we're going to have a market crash that would be very similar to 2000.
It's somewhat. Yeah, somewhat. I mean,
look at it. So if you go back in history, look at 1998. Alan Greenspan cut interest rates for a variety of reasons then. In 1998, we were still in the middle of a dot-com boom. And that really led to more of the dot-com bubble, which was led to the crash in 2000. So I see no good reason to do it right now. And I think they need to be looking at that. And I'm sure they are. They're probably looking at Greenspan's record and saying, hey, look, in 1998, he cut interest rates in the middle of a dot-com boom, where he overreacted to some external pressures on the economy, and it made things worse in the long term. So right now, I think you kind of got to look at that and say, well, if the stock market's on a tear at this point in time, there's no reason to do it.
Yeah, and I agree with that statement. And I don't see any data, if you will, to show a reason why to start cutting rates. Nothing out there right now. They haven't even hit their target of 2%. So
now it's coming faster than I expected it. I will say that the 2%, inflation is coming a lot faster than I expected it, and it's coming a lot faster than I would have ever expected it without a recession to happen. That's for
I
sure.
thought a recession was the only way to get it down to 2%. So
Yeah, me too.
I was wrong on that.
All right. So is that everything you had on that subject here? Because I'm going to move on to General Electric.
Yes, you could go ahead and
All
take your
right.
ring around the track about how great you got with General Electric.
Yeah. So I am gonna preface this. So I want people to go back and to our August. I forget what date, but it was August of 2021. We did a show called GE Past, Present, and Future. And I'm going to preference this by saying, at the beginning of the show, I called the banks a buy. And I said that the increase of interest rates in relation to the Fed tapering would be a boom for the base banks. And by the way, it was. But my mistake there was not valuing the banks correctly. So if you look at JP Morgan's revenue since then, it's increased, for example, quite dramatically. But at the time, that seems that it was already priced into the banks. And my biggest mistake there was calling a buy on banks when I didn't quite understand how banks were valued. My um my the thing that I did do right here on this show was calling General Electric a buy. And I had a full understanding of how General Electric and its peers are valued, and I should have stuck to that. Go ahead, Dave.
And this is why when I have a new investor or trader, I say, what is a sector of the economy that you understand?
Yes.
Because then let's start from there and let's branch out from there. But what sector do you understand? And let's go. Sorry.
So JP Morgan's revenue has more than doubled, but the stock price is like single percentage increase right now. The market may catch up with that. I don't know. I shouldn't have called that, but I was right about General Electric, and that's because I knew what I was doing with General Electric. If you would have bought General Electric, and here's where patience pays, okay? At about that point in time when we did that episode, it was close to about $77 a share. General Electric stock, and this is also where understanding what you buy comes in to play because you're more confident about it, right? It dropped down into the low $50 range. I think even at the high $40 range at one point. So I withstood almost 20% losses, and I bought more when it dropped because I knew that it was becoming substantially undervalued. And time being the premium that it is, as of now, 3 years later, I've more than doubled my initial investment on General Electric. So I'm not going to go too far deep into the history of General Electric here because we already did it on that show. And I do want to kind of, on this episode, I do want to recommend that people go back and listen to that episode so you understand what you're buying when you buy General Electric and you understand its history and why it got to where it's at right now. But I'll touch on it a little bit. In 2018, profitability was declining. GE Capital was losing money. John Flannery was ousted as a CEO. They had acquired Alstom's power business. This was hugely disastrous for General Electric. Its massive debt load, give me 1 second, Dave, was $112 billion. They've shaved over $100 billion off that debt just since Mr. Culp took over back in 2018. So huge turnaround there. Cash flow was terrible. Its debt was continuously growing. Liabilities were growing, resulting in this resulted in downgrades from major credit rating firms. They slashed its dividend to just a penny per quarter. Okay, go ahead, Dave.
No, I was just going to add. I mean, I used to crack a joke during this time of the bad time at GE that they would have a new CEO faster than the Cleveland Browns would have a new coach or a new starting quarterback, and it was just a running joke. GE just went through CEOs so much.
Yeah. So Larry Culp joined the board in 2018. And 5 months later, he was being asked to do what a lot of people thought would be impossible, and that was to save General Electric. And General Electric, if you didn't know, founded by Thomas Edison in 1892. Culp immediately set about selling businesses. He paid down debt, and he announced in 2021 that General Electric would split into 3 separate companies. Since early 2023 spinoff of GE Healthcare, shares of General Electric have gained about 120%, and GE Healthcare has gained about 50%. Both have outperformed the S&P 500 index. The final move in this split of 3 ways is coming April 2nd. General Electric will split itself into 2. The parent company will be renamed GE Aerospace. That's the maker of airplane engines. The power business will be spun off and named GE Vernova. Shareholders are going to receive 1 GE Vernova share for every 4 GE shares that they own. We're probably going to hear more about this when they have their investor days on March 6th and 7th, so expect me to be reporting on that. Jim Osman, founder of Edge, which provides research and recommendations about special situations such as corporate breakoffs and spinoffs, says that with Kolb's visionary guidance, General Electric will be one of the most amazing turnarounds I've ever seen. GE has repaid, like I said, some $100 billion in debt since the end of 2018. Its debt load is now down to just $21 billion. Free cash flow, which had dropped from $5.6 billion in 2017 to $2.3 billion in 2019, has started growing again. GE generated $5.2 billion in 2023 and should produce more than $6 billion in free cash flow in 2024. So big turnaround here. Another thing, though, too, by the way, if you would have bought those banks, you'd have like a single percentage gain on that, maybe, and you would have probably had some big losses. But here, this General Electric, as I've always said, the flowers and the stock market outgrow and outshine your weeds. So mistakes are made, but your victories, as long as you hold true to your convictions, will more than make up for the mistakes.
Yeah, I like it. Free cash flow, though, if you listen to last week's show, I talked about a company that had lots of free cash flow but was still doing horrible. So
yeah, well,
it's
that was
not the whole bag.
but they're not, they have to operate on all cylinders, right? So you have to see growth and profitability, growth in revenue, growth in free cash flow. If you're only focusing on that one thing and you're letting the other things slide, then your stock price does not deserve to go up.
Yeah, and the point I was going to make was that it's one piece of the puzzle.
Yeah.
You need to look at the whole puzzle and all the pieces, and you want to make sure that at least 9 out of 10 are kicking, so that before that stock is a good buy there.
Yeah, so I sat through 20% losses at one point in time. So what? I'm up 115% right now.
I tell you what,
Happy with it.
every single time I try to trade Tesla or I invest in Tesla, it drops right away. But I end up making money off of it. I end up profitable every single time. I've yet to invest in Tesla and not make money off of it.
Right.
It's just it drops every single time, and I'm just like, here we go again.
Yeah. So that's
and I wish I would have took your approach that you have with investing way back in the day when I was trading NVIDIA all the time, and just put money in NVIDIA and left it there, because I would be walking away, and I would not be. I would still be doing this podcast, but I wouldn't be doing all the other stuff I'm doing now. I would be on the beach right now recording this podcast in like the Bahamas if I had did that with all my money in NVIDIA years back.
Yeah, so I started really kind of getting into the stock market when I was about 22 years old, and 22-year-old me would have sold this in the $50 range.
Yeah. See, and I think that's when you and I first met, right? Back in 2009, was it 9?
8, maybe.
8? Was it 8 or 9?
It was 8. I think it was 8. So I started becoming interested in the stock market, really studying it during the Great Recession.
Yeah. So yeah.
Yeah, and I don't think I really got into stocks until about 2009, 2010.
Right.
And there's not a single stock in my portfolio that I've held since then, which is a mistake on my part.
And the same here. I was doing it then, And yeah, no, not a single one I'm still holding. And now there are ones I hold and I'm not letting go, but like I wish I would have. I
Yeah,
wish I
me
would
too.
have. Oh well.
Me too. So here's the thing. All right. So I was listening to this episode and we were 20 episodes in and we were celebrating our 20th episode,
Okay.
talking about how big of a milestone 150 would be. And I think we're on 149 right now.
Are we
Uh,
really? Okay. All right.
if you go
Nice.
back and listen to this, you can clearly hear me snacking on something. And it was just so nonchalant about it. I had no idea what I was doing. Dave, you had no idea what you were doing.
Yeah.
So forgive
To,
the
to
audio of that podcast when you listen to it.
to anybody listening right now, do not listen to any of our first like I don't even I would say 30 or 40 episodes. It's just
Yeah.
we are brand new at podcasting or any of this, and we had no idea
Yeah.
how to
So
put together a show.
let's still go back and listen to the GE past, present, and future, just so you get, the lay of the land of what
Uh,
GE is about. Because right now, even up the way that I am right now, coming with a split GE Vernova and GE Aerospace, I think GE is still a buy at this point. Um,
really,
yeah, I
you
went
see
back and
upside on it.
re-examined this. I still think General Electric is slightly undervalued for where it should be. I think you're probably going to have probably $200 worth of shares per share that you buy right now once GE Vernova splits off. I'm not a big fan of holding GE Vernova for the long term right now, although they may prove me wrong because GE's leadership right now is spectacular. But I'm just not a big fan of the wind business. I think it's just too tough of a business, too narrow margins.
All right, that's good, man. I like you making a call.
Yeah.
You don't hardly ever make calls anymore,
But
so
but
that you must feel
aerospace,
confident. You must
look,
feel confident.
aerospace as a hold. Aerospace, you buy this stock, you hold aerospace, you don't sell it because there's just too much going on there. I mean, not only do they sell the engines, but they come back and repair them. So every engine they sell to Boeing or Airbus, they have recurring revenue for the rest of that engine's life. And the margins are pretty good
Nice.
on it. So
There you go. All right, man. Moving from GE, I got a couple things I want to mention here real quick. So we go from Brandon, who covers like one company for 15 minutes, to Dave, who's like lightning round. Here we go. 3 minutes on this thing, 3 minutes on that, and that's just how my mind works. So real quick, Tesla. I like the car business, but I believe in the future of something else. Tesla. If you go on YouTube, you can YouTube Tesla. Um, Robot. They just released video footage of their latest one, the Optimus version 2, and it's pretty impressive because if you watch a video, they show you how they progress from like one version of this robot to another version to what they have now, and the progression seems it's a lot faster than what we think. They've shown videos on YouTube of this robot performing tasks inside warehouses, working together. In the video, it shows it picking up an egg without smashing it and switching it to the other hand and putting it in a special spot. This robot can do a lot. And this robot is meant to replace a lot of the warehouse jobs or warehousing. I'm pretty sure like UPS and FedEx would love to have robots in their factories just moving these boxes around instead of actual people. Um, just from a cost perspective. So with Tesla moving so fast in this actual robot industry that yes, I don't think you're going to see any kind of real revenue from it for at least probably what another 10 years, Brandon, you would think.
yeah, I would think
Um,
probably about 10.
but once it starts coming in, I think it's going to be like a huge windfall because every company, Amazon, UPS, FedEx, everybody is going to be buying these up so that they can just go ahead and put them in their buildings and have the robots do the work. They don't need breaks, they don't need timeouts. They just need to get recharged every so often. You know what I mean?
Mhm.
It's going to be a huge move in that fact, and the fact that you're going to have Tesla trucks that are driving themselves, so the robots load the trucks drive themselves to the next location, robots unload it. You probably won't need a human person in between any of all these steps for a while. But that's one of the reasons why I would say, yes, the EV market is great. Buy it for that. It's with the AI. Like I pointed out before, with the autonomous vehicle system currently in cars right now, AI is going to be able to save Tesla between $5,000 and $8,000 per vehicle based on using it in its technology, especially with the AV part of the cars. So going forward, it's going to save Tesla even more money because right now Tesla is the only car company is able to slash prices and still remain profitable. I don't know how many times I can repeat that before people actually get that in their head. Like Ford had to slash prices on all their cars and they're selling them at a loss. GM, same thing. Everybody, same thing. Tesla's the only one who could still be profitable.
Well, Tesla doesn't have the legacy costs that Ford or General Motors has.
And
So
that's right. And countries are trying to force them to do it, like Norway. There's a battle over there over that. But anyways, that's my thing on Tesla. All right. The next thing I want to talk about real quick, cryptocurrency. So Bitcoin at near all-time highs has people wondering, like, okay, did I miss the boat on Bitcoin? Because we just talked about gaps and missing the gap and everything else. But what I did say after I said, like, if something's gapped up, you may have already missed it, was do your research. See if there's still more room to run, right? So with Bitcoin, here's my advice. I own some Bitcoin. I've owned some Ripple. I've made 20% off of Ripple the past 2 months. I've had a great run on Ripple. I got out of Ripple though because I think Ripple has too many other issues. I was very happy about it. And I talked positive about it a couple months ago, but then the more I looked into it, the more I did my research, the more I realized there's too many underlying issues here. I got out. I took my 20%. I was very happy with that. Thank you, Ripple. But I might be putting that since this is my crypto money, quote unquote. I might just go ahead and buy some Bitcoin. Who cares if it's at this level or not? Because my Bitcoin I have is just long-term investments. Um, I believe Bitcoin's going to go higher, and here's why. The main driver of Bitcoin going higher this year than where it's at right now, where it's almost at all-time highs, is the fact of the halving event, which still hasn't happened. And I talked about this in December of last year, and I've talked about the halving event with Bitcoin, and it still hasn't happened. So I believe once that happens, Bitcoin's going to jump up another 20-30% on top of wherever it is at that moment. So do I believe Bitcoin is still a good buy at this level? Yes. There's been a lot of movement on Dogecoin. Dogecoin trailed the movement on Bitcoin. So Bitcoin, what I mean by that, when someone says Dogecoin trailed the movement of Bitcoin, means Bitcoin took its move up and Dogecoin did its move a few days afterwards. So you could have made money off of Dogecoin because usually all the coins rise together or fall together. All the big name ones, quote unquote, the brand name ones. But Dogecoin was trailing and it didn't rise with it. But now it did rise and it came into now the top 10 of market cap for cryptocurrencies. Bitcoin's still best one out there. Ethereum's always number two. You have Solana and then Ripple and a few other ones, Cardano. But Bitcoin would be the one I would invest in. Maybe Ethereum. Ethereum has a lot of good uses as well. That's my 2 cents on cryptocurrency. Brandon, I know you never have any thoughts at all or your
yeah,
response,
no, I
but
mean, I think I like I've said 1,000 times, I like the idea of Bitcoin.
all right, there you
I
go. So
like the theory behind it.
yeah, so Bitcoin's the only one I'm saying would be a good investment right now at this level. All the other ones, a lot of them are just purely speculative. Bitcoin, though, is I feel, safe play given that they have an event hasn't happened yet, and that's the key there. All right. All right, Brandon, I got 2 headlines for you. You ready?
Yeah.
All right. First headline's pretty straightforward here, but I'm going to read it anyways. Now, this is a publicly traded company, IMAX. IMAX ran out of seats for Dune Part 2. And so it's got Legendary Entertainment, one of the makers of Dune, interested in doing a Part 3. Here's the interesting thing about this is that Dune Part 2 had a good box office opening, 81.5 million. I mean, it doesn't sound like a lot because in the 2010s, we were getting hundreds of millions of dollars in the first opening. However,
Dune?
lately, huh?
For Dune?
For Dune, they did 81.5 million at the box office so far. The weekend's not over with. It's still Sunday. So
I ask because I've never heard of this movie before.
Okay. All right. So I already you've lost a level of respect with me, but anyways, nonetheless, it's not about the movie, and you'll see why here in a second, right? Um, so the IMAX sales were 18.5 million of IMAX sales. This is huge for IMAX. However, some of the location for IMAX screenings, they're not even available to show Dune until 3 weeks out. So you may see a longer trail, if you will, and this is a common theme now with blockbusters currently after COVID, right? Is a longer trail of sales after the first opening weekend. They stay in theaters longer and continue to have great sales week over week for a number of weeks. We saw this with Oppenheimer. That was another one that again had a long tail. Avatar: The Way of Water again had a long tail. They're saying that Dune is going to have a long tail as well, and mainly due to IMAX. Now, IMAX is looking to move their stock based off the news. When Dune opened, IMAX stock did jump 10% just off the fact of Dune opening and the pre-sales were going so high for IMAX. IMAX did take a dip back down after that gap up. Do I believe it's time to buy IMAX? I don't know. Brandon, your thoughts real quick.
No.
You're not buying it. They have
Uh,
no more. They can't sell any more seats.
it,
They ran out of seats to sell, and you're still not buying IMAX.
it just for me, it's not an industry that I really care about.
All right, fair enough. Fair enough. I think I wouldn't buy it based off of just this one movie. I would like to see a pipeline of movies that would continue to have continued success for IMAX. Although this movie could make IMAX's quarter and make their quarter look really good. So next earnings report, they might have a good earnings report going into it. But I don't. You got to have more than just one big movie to keep IMAX sales going.
Okay. Yeah, I don't. I think I wouldn't buy it. I just don't know much about that the movie industry as far as that goes. I mean, movie industry. What I'm buying is Disney. This is apparently produced by Legendary Pictures. I don't think that's a viable stock. So I don't.
No.
I don't think they're a public company. Um. Yeah, I don't. I don't see. I just don't see any value in movie theaters anymore.
Legendary Pictures and Warner Brothers teamed up on this.
Okay, so Warner Brothers would be the buy out of any of these stocks or companies that you're talking about. But yeah,
Yeah.
I'm gonna
IMAX
ignorant.
IMAX is a stock too you could buy if you wanted to, but again, it's just one movie, so
Yeah.
there you go. That's a good one, and I can't believe you don't know Dune.
So here's
Dune
the
was
big
a
headwind. Just off the top of my head here, here's the big headwind. We got if people do start buying these headsets and they start watching their own 3D movies at home, where's IMAX fit in?
yeah, that's true. I mean, but I mean, a lot of people have had access to this for years who weren't Apple people, so
Yeah. Well,
I'm going to continue to throw that in that argument every day.
you know what? You know what Apple does well, and you mentioned
Marketing,
this. You mentioned this. It's the marketing, right?
yes,
But if you watch commercials for other companies that have not done as well as Apple, they present the what in the commercials. It's all about here's this, here's what it does, right? Apple presents the why. There's the why you need this in your life. That's what Apple does so well with marketing. They start with the why and they get people to buy in based off that. And at that point, it doesn't really matter if you've copycatted.
yeah,
It matters that you've sold your product 1,000 times better than anybody else ever has. That's why the Microsoft tablets didn't take off the way Apple's iPad did,
yeah,
despite the fact that you could probably use that Microsoft tablets for a lot more, things than you can use the Apple for.
yes, yes, you could.
Yeah.
um, all right, but yeah, and Dune was a book written in I believe I might be wrong on this, 1960s by Frank Herbert. It was first, and he wrote a series of Dune books. This movie, the Dune Part One and Part Two, is based off the first book. There was a movie made in 1985, Dune, that tried to cover all the first book in one movie, which everybody criticized, said is too much for one movie, but is the 80s and you weren't going to get two movies, produce. So fast forward now, they did a remake, and they did it in two different movies. So little history on Dune.
Okay.
All
I'll
right,
have to look into it. My
I know you won't.
history, my knowledge of pop culture stops at 2005.
All right, there you go. All right, so next one, I really this I found very interesting. I don't know if there's any kind of investment you can make off this. I did now, Brandon. As I talk, please, I want you to check this company I'm going to mention and see if we can invest in them, because I found this right before we went on for the show, and I read this. It was a very good article. Helium discovered in Minnesota as U.S. supplies dwindle. So, Brandon, the company we're going to talk about is Pulsar Helium. Pulsar Helium. It's a Canadian-based company, and they announced in a news release on Thursday that its team encountered gases with concentrations of up to 12.4% helium when they were drilling, reached a total depth of 2,200 at the Topaz Project drill site. Now, if you're wondering, okay, 12% of that area that they drilled to was helium. Well, helium concentrations above 0.3% are considered economically viable. So 12.4% is great. People were very excited about this. They even went on to say it's a big day for helium exploration and confirming the original discovery in new jurisdiction of Minnesota. Why is this such a big deal? So if you go on down to the article, and you start reading here, you see in January, the Compressed Gas Association warned in a letter that the U.S. government's selling of its Federal Helium Reserve System, or FHR, could lead to severe disruption in the U.S. helium supply chain. I didn't even know that they were warning we're gonna have severe disruptions in our supply chain of helium, but apparently this was announced in January. For everybody else out there who wasn't paying attention, this is a real thing. The FHR spans across Texas, Oklahoma, and Kansas, and provides 20% of the U.S. helium supply. The Minnesota helium reservoir was accidentally found in the Iron Range in 2011 by a company called Duluth Metals. They were actually drilling for platinum and palladium and came across this helium supply. And so this is a really big deal because you use helium, believe it or not, in lots of things. Helium can take a liquid form that acts as a coolant for superconducting magnets needed to operate MRI machines and in the manufacturing of semiconductors. The gas also has applications in the defense industry, from rocket engine testing to air-to-air missile guidance systems and more. So it has a lot of aspects in this, and I did not know the U.S. was getting low on helium.
Puts on
Brandon.
Party City.
But it's at Party City. There you go.
Yeah,
But did you find the company Pulsar?
I did not know.
Nothing
No,
on
I
them?
was looking at the uses for helium. Do they use them in tires?
No,
Okay.
no.
All right. Well, see, you just showed my ignorance in car knowledge and in pop culture. So there's that.
Right? So I was looking, and like I said, I just found this right before we were getting ready to get on the show. And so I don't know of any way to make a play on this at all, or if there was that company was publicly traded or not. But the thing I found interesting is that I don't think anyone was aware that our U.S. supply chain of helium was getting low, and that we're happy that we found this reservoir of helium with a 12.4% concentration, which is just extraordinary to find. So
Yeah, I don't think Pulsar's publicly traded.
okay, all right.
So,
So there you go.
but
Maybe look into some companies that are publicly traded helium, because if our supply is low, supply goes down, price goes up,
yeah.
and that's the way things
Okay.
work.
So it is interesting too that you think that certain things don't matter. So the kind of effects that they actually have on our economy. Something like helium, which I don't know anything about. There's there's a crypto named Helium.
Yeah, I knew that.
Okay.
Final thoughts, Brandon. Take us away.
Yeah, just patience pays. Look, I bought General Electric at $77 a share, I think is what I just saw when I was looking at it, 77 a share, and had to hold through some losses to, see those gains realized. And I had faith in the management of General Electric with Lawrence Culp taking over. Knew that he was going to do a really good job. Was 99% certain that he'd be able to turn this company around, despite the fact that that it was in really, really bad condition. The turnaround wound up happening faster than I expected it to. I expect kind of the same thing to happen, as I've said 1,000 times before. I'll reiterate it with Disney. Um, it's it's a game of it's a waiting game sometimes. And you got to hold true to your convictions and buy things that you're going to be confident in. Otherwise, you will sell when you take that 50, that 20% loss. You'll see that paper loss, you'll panic and you'll get rid of it. And it's a mistake.
It is a mistake. Yes.
Buy and hold tight on those.
Buy and hold. I like that, and that's one thing I recommend for Tesla. And it's a robot revolution. It's going to come in with the robots take over warehouses. They're going to take over transportation. It's going to be everywhere. But is it going to be everywhere anytime soon? No. So if you are, I would say around 40 or 50, you're still young enough to get in on this and
Yeah.
see those massive returns from the robot sales is what I'll say. But yeah, even if you're not, you're still going to see some returns from the EV market, as I believe Tesla's going to remain the leader in that area just because of profitability with the cars. I've been looking into Riot. I don't understand why it's not moving up with Bitcoin. Hopefully, I'll have an update on that for all of our listeners, because I know that's one stock that gets traded. Because Marathon Digital is another one that gets traded with Bitcoin, and it moved up with Bitcoin, but Riot didn't. So I wonder if there's something underlying going wrong with Riot. I'll take a look at that and have an update next week for everybody here. Updated Nova Nordis, it jumped up to 125, even with the news of that other company coming out. Another company come out saying that they have a great weight loss drug, but it's still in trials. They cannot sell it on the open market yet. I believe it's Viking Therapeutics is the name. The stock has jumped up tremendously, gapped up a lot, even though this is not being sold on the market yet. So I don't believe they're going to be a competition for Novo Nordisk or Eli Lilly, who actually have weight loss drugs on the market. So I'm not concerned about that. Novo Nordisk still is going to have a good run this year, and they are still a solid company at 125. I would definitely still get in on that. I'm not worried about Viking Therapeutics at all.
Okay.
All right, everybody. So thank you for listening. If you like what you hear, please hit the subscribe button and follow us wherever you're listening to us. As always, we hope we've been entertaining, educational, and uplifting, because we want everyone to make money. Have a good night.
Have a good night.
It's near its all-time